Okay, price ladder and trading lingo. Now, you'll hear through our live stream when we do our weekly stream directly on the trading floor, and you're watching our traders, you know, in the action, speaking. You'll sometimes hear some explicit words, but it is a trading floor and emotions run high, especially when the markets are moving around. And you'll hear traders speaking about a whole bunch of different words that potentially you've never heard of before. And so for you to really take a learning of what the traders are looking at in the heat of the moment, what they're looking at on the price ladder, how they are effectively seeing the movement into the market. It's really important for you as we go throughout this course, understanding the different types of language and the lingo that we really speak about. So whenever someone says sell or buy at market, that effectively means that you're executing at market. So the moment you want to sell and buy at market, it means you want to get whatever price the market is that you want to sell at or you want to buy, you're going to execute at market. And we talk about that through our through all of our videos. So if any of you don't really understand any of this lingo now, it'll be made a lot more clearer when we go through actually practical examples later on in all the modules when you look at the various types of order flow setups. Bid or offer me. For example, a broker, a hedge fund might phone a broker and say, I want you to bid me 500 lots at 65s in the bunds. So it's not going in at market, but there's a specific price that you want on the buy side, so you bid me. Or if you are looking to sell at a specific type or a specific price, the market might not be at that price at the moment, then you can mention to offer me. So there might be other traders on the floor. One trader's system goes down, he might say, can you bid me 600 lots at this price or offer me 500 lots at that price? And again, we'll speak about this through our videos. When we say, oh, just been filled or filled, it means that whatever passive order you had in the marketplace. So if you wanted to buy 2 lots at 55s, the moment the market trades down to 55s and it trades out, that's when you effectively filled. And you'll say some traders, you'll hear them say, I've just been filled at 55 on a specific passive order. When they say, oh, the market's in a range, it just means that the market is oscillating between a certain range and a particular type of time frame. So if any of you have studied chart patterns, you'll understand more or less of what that means. Whenever you hear a trader saying, I just puked, it means effectively, so say if he was long at 55s and the market traded down to 50s and then his exit was at 49s, the market trades at 49s, he exits his trade for that risk that he had, and a lot of traders say, I just puked. And a lot of times that term is used when you've effectively paid a bad price and the market maybe rebounds after it. So that effectively means that when you're puking, you're selling out at market after being long in the market. When you say pay the high, so if you were selling, if you were shorting the market and you were short at 50 and the market trades up to 55, so you now running a loss on your trade and you exit the trade, and then the market, as soon as you exit the trade, the market comes back towards your price. A lot of traders say, I paid the high, or I paid the absolute high, meaning that you got out at a price just before the market actually turned in your favor. Then there is stacking the bid or the offer. So if you're stacking the bid, what you're effectively doing is you're loading up all your prices. So, you know, on 55, 56, 57, 58, 59, and the market's trading at 60, you've effectively stacked the bid with a whole bunch of buy-side orders. And the converse is true when you stack the offer, where the market's trading 60, but you're offering 61, 62, 63, 64, 65, 66, and you offering the market, and that's called stacking the offer. Whenever a trader shouts out what prices are trading, what's a trading price, it's just where the market is trading currently. What price can you get at market? So you can bid 55, offer 56, and this is that is a term that's used of what is the market actually currently trading at. Then when a trader says the market is bearish, effectively whatever time frame is looking at, that the market is actually coming off. So if you're looking on a very intraday basis, the market sold off 10 ticks, you might say traders say this looks bearish. So bearish means that the market is selling off. Bullish means the converse is mean the market is going up and it's represented by a bull, and as we said earlier, bearish is represented by a bear. So bullish means markets are going up and bearish means markets are coming down. When the market has just gone a tick up or a tick down, it's just the smallest incremental move for that specific market that you're looking at, however it is priced. So tick up means that the market has moved one tick up in its smallest incremental pricing, and when it's ticked down, that is also the opposite is true. When the market ticks down one tick, the market has sold one tick in its smallest possible pricing increments. Accumulation versus distribution zone. So if you notice a buyer between 50 and 54, so every time the market comes down to 50 to 54, someone steps in and buys every price 50, 51, 52, 53, 54, then that's someone that's accumulating. Accumulation is generally on the buy side. Distribution is on the sell side. So for example, the market, every time it approaches 60 and trades to 65, between 60 and 65 you see a seller come in from 65 to 60 using some particular type of order execution trading strategy type, and he just keeps on reselling that range, whether it be a time slice order or a volume slice order, which we look at in the absorption module area. Then you can execute a certain type of order flow pattern. Once you've spot someone who's accumulating an area or distributing an area, you can get it in small time frames and very large macro time frames. And you could also talk about when someone's sitting on the bid, that effectively means that someone keeps on reloading a buy. So the market trades towards 60, so trades from 63, 62, 61 to 60. The moment it gets to 60, there's a 500 lot. That 500 lot gets taken, another 500 lot reappears, and then it gets taken, and another 500 lot reappears at 60. That means someone is sitting on the bid. Another term for that is reloading. Reloading the bid, and then you can get the converse that is true is sitting on the offer, where someone just reloads or keeps on stacking that particular price every time the price gets taken. For you, there are a couple of links there of more technical jargon words. I advise you to go through all of those links, review it, so you really start understanding all the different types of words that can be used on a trading floor when we are doing our streams on our ladder analysis or our technical streams, and more importantly when you're watching our traders live in action on the trading across all of our trading floors across the world. You'll be able to understand what they're talking about, and it's be a lot more effective in your development and your learning.